Hello everyone, welcome to the market opening bell for Wednesday, January 21st, your 10-minute guide to the stock market. The market is focused on renewed concerns over US-Europe tariffs, and Hong Kong stocks have traded softly. The Hang Seng Index opened 19 points lower, briefly rose 74 points to a high of 26,638 in early trading, then turned downward at one point, falling 200 points to a low of 26,363 and closed the day down 76 points or 0.3% at 26,487. The H-share index fell 39 points or 0.4% to 9,094, while the Hang Seng Tech Index dropped 66 points or 1.2% to 5,683. Total market turnover was $237.7 billion. Mainland funds accounted for $97.2 billion of turnover, with net southbound fund inflows of $3.663 billion. Among the major flows, net buying was seen in Tencent at $663 million, Meituan $573 million, Xiaomi $395 million, PopMart $347 million, Hua Hong Semiconductor $245 million, and Yangtze Optical Fiber and Cable $154 million. Net selling was concentrated in SMIC at $717 million, China Mobile and UBTech Robotics $637 million and $517 million respectively. According to statistics, southbound funds have now bought Tencent on a net basis for 10 consecutive days, totaling $10.621 billion. Alibaba for 7 consecutive days, totaling $4.756 billion. Hua Hong Semiconductor for 4 consecutive days, totaling $1.339 billion, and Xiaomi for 3 consecutive days, totaling $1.429 billion. Meanwhile, China Mobile had seen net selling for 12 straight days, amounting to $9.299 billion. Technically, the Hang Seng Index has broken below 26,500 and is approaching the 20-day moving average at 26,285. If the 20-day line is lost, the next supports would be the 50-day and 100-day lines, both currently near the 26,100 level. On the mainland, the Shanghai Composite closed down less than 1 point at 4,113. The Shenzhen Component Index fell under 38 points or 1% to 14,155, while the Chinex Index dropped 59 points or 1.8% to 3,277. Total A-share turnover in Shanghai and Shenzhen was 2.78 trillion yuan. The renminbi midpoint rate was raised 45 pips to 7.0006 against the US dollar, hitting a fresh high in more than 2.5 years. The People's Bank of China announced that the 1-year and 5-year LPR rates remain unchanged at 3% and 3.5% respectively, in line with market expectations. In Hong Kong sectors, aviation stocks continued their upward momentum. During the Spring Festival travel rush, traditional homecoming, family visit, and student flows will overlap with strong tourism and holiday demand, further releasing air travel appetite. Forecasts suggest national civil aviation passenger volume could reach 95 million during this year's Spring Festival period, or an average of 2.38 million per day, up about 5.3% year-on-year. 2 peaks are expected around the holiday and with the later timing of this year's Lunar New Year. Post-holiday return flows for students and workers will be more concentrated, potentially pushing single-day peaks to 2.6 million passengers. Based on airlines' preliminary flight plans, around 780,000 flights are scheduled nationwide, or about 19,400 per day, up 5% year-on-year. The investment case for the aviation sector stands out on 3 main factors. First, aircraft introductions remain at low growth rates, constraining supply. 2. Structural improvement in demand, with cross-border travel stronger than domestic and business travel intention returning to expansion territory after September 2025. and 3 load factors already back to historical highs, giving room for pricing elasticity to emerge. Average fares have turned positive year-on-year since mid-September 2025. China Duty Free announced through its subsidiary CDF International that it intends to acquire DFS stores in Hong Kong and Macau, plus intangible assets in Greater China for no more than $395 million in cash. The company will issue up to 7.3301 million and 4.6374 million H shares, respectively, to Delphin SAS and Shoppers Holdings Hong Kong at 77.21 Hong Kong dollars per share. Delphin SAS is an indirect wholly owned subsidiary of LVMH, while Shoppers Holdings Hong Kong is held by the Mountain Trust Company as trustee for a private family trust benefiting the Mac family. China Duty Free has also signed a memorandum of understanding with LVMH to explore cooperation in strategically aligned retail areas. The acquisition will help expand the company's service network, especially in key gateway cities like Hong Kong and Macau, radiating into the Greater Bay Area and solidifying its leadership in Greater China travel retail. The strategic partnership with LVMH will provide access to more top luxury brands, ensuring stable supply and deeper cooperation models, strengthening supply chain advantages. CK Hutchison bucked the market trend and rose amid reports that the group is in talks to sell its Irish mobile operator, Three Ireland, to Liberty Global. Sources say negotiations are in the late stages. New Street Research estimates Three Ireland could be valued as high as 1.5 billion euros. If the sale proceeds, CK Hutchison would continue exploring a spin-off and listing of its telecom assets covering Europe, Hong Kong and Southeast Asia in London or Hong Kong, with preliminary valuations of 10 to 15 billion pound, roughly 100 to 150 billion Hong Kong dollars. Analysts note that CK Hutchison is unlocking value through spin-offs of high-value businesses, telecom and retail, to narrow the persistent holding company discount. The current price-to-book ratio is about 0.44 times. Baidu continues its counter-trend gains. Its Wenxin Assistant now has over 200 million monthly active users, forming one of the 3 major billion-scale AI portals in China alongside Doubao and Qianwen. Wenxin Assistant launched within the Baidu app is powered by the Ernie large model and Baidu's Orient AI engine, achieving deep integration of search and AI. It is already connected to Baidu Health, Maps, and external MCP tools such as JD.com. Enter Sports releases Q4 2025 operating update. The key highlight was synergistic growth across its multi-brand matrix, with premium outdoor brands such as Dassault and Cologne Sport acting as the main growth drivers, recording 35 to 40% retail sales growth for the quarter and 45 to 50% for the full year. The core Enter brand saw low single-digit negative retail growth, reflecting intense competition in mass-market sportswear. Fila recorded mid-single-digit positive growth. For full year 2025, the Enter brand achieved low single-digit positive retail growth year-on-year. Fila mid-single-digit positive growth, and all other brands 45 to 50% growth. Sasa International reported that overall turnover for its fiscal third quarter, October 1st to December 31st, 2025, reached 1.1588 billion Hong Kong dollars, up 12.5% year-on-year. Offline sales were $952.1 million, up 12% and accounting for 82.2% of total turnover. As of December 31st, 2025, the group operated 159 physical stores, 4 more than a year earlier. Online sales reached $206.7 million, up 14.9% and representing 17.8% of total turnover. By focusing on trending beauty and personal care products and strengthening merchandising, marketing and promotion, offline sales in Hong Kong and Macau rose 11.8% year-on-year to $851.6 million, with same-store sales up 14.7%. Average transaction value and total transactions grew for 9.4% and 2.9% respectively. Improved supply chain stability for online platforms boosted efficiency, driving the 14.9% online growth. Mainland China accounted for 47.5% of online sales, Hong Kong and Macau 33.6%, and Southeast Asia and other regions 18.9%, with steady growth across all online markets. Combined with the earlier reported 54.8% surge in interim net profits, the Q3 figures further confirm that the group has emerged from its trough. The stable dividend policy payout ratio around 71% should continue to support the share price. Concerns over a renewed US-Europe tariff war sent US stocks sharply lower. The fear gauge VIX jumped 1.25 points or 6.6% to 20.09. The Dow fell as much as 931 points intraday and closed down 870 points at 48,488. The Nasdaq ended at 22,954, down 561 points or 2.4%, while the S&P 500 closed at 6,796, down 143 points or 2.1%. The Nasdaq Golden Dragon China Index tracking US-listed Chinese stocks fell 111 points or 1.5% to 7,608. Alibaba's ADR dropped 1.9%. Among mega-cap tech names, Nvidia fell 4.4%, Tesla 4.2%, Apple 3.5%, and Amazon 3.4%. Memory-related stocks bucked the trend on continued optimism over demand. SanDisk rose 7%, while Micron Technology and Intel both gained more than 2%. Netflix has revised its offer to acquire Warner Bros. Discovery, shifting from a previous cash-plus stock mix to an all-cash deal. Warner Bros. Plans to hold a special shareholder meeting to approve the transaction, with Netflix indicating voting could finish as early as April, accelerating the process. If successful, the combined entity would have around 450 million subscribers, giving Netflix a vast content library to compete against Disney and Amazon. The news lifted Netflix shares more than 1% against the market. Industrial conglomerate 3M reported Q4 adjusted revenue of $6.02 billion and earnings per share of $1.83, both slightly above expectations. However, full-year 2026 guidance came in below consensus. Adjusted EPS is forecast at $8.5 to $8.7, midpoint $8.61, about $0.01 short of market estimates. The company cited ongoing weakness in U.S. demand, soft retail conditions, and pressure on discretionary spending impacting its consumer segment. Geopolitical tensions trigger a fresh flight to safety. Gold rose more than 1%, breaking about $4,700 per ounce to a record high of $4,737.54. Silver also hit an all-time high, surpassing $95 per ounce. Funds sold U.S. Treasuries and the dollar index fell 0.5%, while the 10-year U.S. Treasury yield rose to 4.285%, a more than 4-month high. International oil prices climbed, with NYMEX crude settling at $60.34 per barrel, up $0.9 or 1.51%, and Brent at $64.92, up $0.98 or 1.53%. Our stock pick today is Dongyue Group, stock code 189. Dongyue Group is primarily engaged in the manufacturing, distribution, and sales of refrigerants, polymer materials, organic silicon, dichloromethane, polyvinyl chloride, and caustic soda. The group has the world's highest production capacity for R22, which is one of the main refrigerants currently on the market and is used in household appliances. Additionally, R22 has become a key raw material for producing fluoropolymers, namely PTFE, HFP, and other downstream fluorinated chemicals, and R125. R125 and R32 are the mainstream refrigerants on the market today and are the primary components in other types of green refrigerants such as R410A that are replacing R22. These have been widely adopted in inverter air conditioners and other green household appliances. R134A is widely used in automotive air conditioning refrigeration and systems, while R152A is another major refrigerant product of the group. It can also serve as a foaming agent, aerosol propellant, and cleaning agent, as well as a feedstock for producing R142B. Besides its uses as a refrigerant, temperature control medium, and aerospace propellant intermediate, R142B is also a primary raw material for producing VDF. The group relies on its internal supply of R22 to produce TFE, which is then used to manufacture related polymer material products such as PTFE, a synthetic fluoropolymer with high resistance to temperature changes, excellent insulation, aging resistance, and chemical resistance. It is used as a coating material, can be further processed into high-end fine chemicals, and finds wide applications in the chemical, construction, electrical, and electronic and automotive industries. And HFP is an important organic fluorine monomer used in the production of various fine chemicals. In addition, the group's refrigerant division supplies R22 and R142B as feedstocks for producing a range of downstream fluoropolymer fine chemicals, including FEP, FKM, and PVDF. FEP is modified materials of PTFE produced by incorporating HFP into TFE and is mainly used for wire insulation, thin wall tubing, heat shrinkable tubing, water pumps, valves, and plumbing. FKM fluorine rubber is a specialized fluorinated material which is mainly used in the fields of aerospace, automotive machinery, and petrochemistry due to its superior mechanical property, excellent oil, chemical, and heat resistance. PVDF is a fluorocarbon produced by first using R142B to make VDF and then polymerizing VDF. It's mainly used as a lithium battery cathode binder, photovoltaic backplane membrane, anti-corrosion coatings, and as a raw material for VDF. In the first half of 2025, quota restrictions led to sharp price increases for certain key products in the group's refrigerant division, driving substantial performance growth in that segment. This pushed the group's gross margin to 29.11% compared to 19.83% in the same period of 2024, and the overall segment profit margin to 19.08% compared to 8.97% in the same period of 2024. Going forward, the group will adopt a more market-oriented approach, strengthen coverage of target customers in niche segments, and build a closed-loop operating model linking technology, sales, customers. Recommendation: buy at $11.50, target price $12.80, stop loss at $10.90. I do not hold the above stock.